Hello, everyone, and welcome to our special event today called Chart Madness. I'll be hosting the festivities today. I'm Dave Keller, the Chief Market Strategist here at StockCharts.com in Redmond, Washington. Thanks for joining us as we have three prime experts, stock pickers, and technical analysts to review a bracket of 16 stocks that we've selected ahead of time. If you haven't done so already, go to our website, stockcharts.com/chartmadness. You can actually download the bracket of 16 stocks that we selected. You can make your own picks, see how what you're thinking lines up with what our experts, our panelists are thinking, and we'll see over time how those picks evolve in terms of performance. Here's what we did. We took a group of 16 stocks, and I will say the debate between the presenters started as we decided which 16 names we would select, how we would pair them up, and we really focused on the matchups in that first round because we feel that these are a lot of the conversations you could be having or should be having as an investor. Do you want to own a Ford or a Tesla, an Intel or an NVIDIA, a JPMorgan or Travelers Insurance? These are the types of things you should be thinking about as you're looking at the charts, looking at StockCharts.com and trying to make your decisions. So what we did was we selected 16 names. What we agreed on was think about the next 6 months and have that as our general time projection. So depending on your own time frame, if you're trading minute to minute or if you're trading multiple years out, obviously your picks could look very different. But we were trying to focus on the average holding period we thought a lot of our viewers would be looking for. So we aimed at about 6 months. So our goal, pick the stocks today. We'll track them over the coming months and see how the market evolves relative to what some of our expectations were. Let's bring on our three panelists. Joining me today, we have Tom Bowley. Tom's the chief strategist at Earnings Beats and a longtime StockCharts contributor. We have Greg Schnell, the founder of GregSchnell.com. And we have our own Grayson Roze, VP of Operations here at StockCharts.com. Gentlemen, thank you for being willing to put your picks out there on the line, and thanks for joining us today.
Good to be here.
Thanks for having me, Dave.
It's going to be fun.
So I'm curious, before we get to the picks, we're going to start and go through the bracket one by one. Any general reactions? Was this an easy exercise? Was it challenging? What did you guys think?
This was tough. It was really tough. There's a lot of great matchups on it.
Yeah, I would just say, and I agree, Grayson, I think there were some really good matchups. There were some that I looked at and picked them pretty quickly, but then there were a handful in there I thought that were really tough. But, you know, when you think about it, I mean, we're just comparing two stocks, and we got all of our viewers out there trying to figure out what to do with thousands of stocks. So we ought to be able to pick between two of them, but it's not easy. It's not easy. I mean, some of these were pretty similar in the way their charts look. Some of them were similar in their style, in terms of being value versus growth. So it'll be an interesting discussion for sure.
And Greg, I only got one energy name on there for you, but overall, what did you feel about the exercise?
I'm thrilled with it. I mean, it's always interesting. I have momentum indicators that I really like to watch, and so when I see charts rolling over like that, I tend to stay away for a while. So it's very funny to see the different opinions on charts because I'll call it ready to sell at any given time, and some others are stronger holders. So anyway, it'll be interesting to see how the debate falls. So
let's get to the picks. So folks, here's what we're going to do. We have 8 first-round picks. We've selected 16 stocks. We put them in a bracket. If you downloaded the bracket from StockCharts.com/chartmadness, we're going to start in the northwest corner. And what we're going to do in this first round is look at each matchup one at a time. I'll invite each of our panelists to break down that matchup in a minute or less and just give us what they decided between the two. After we go through that first round, we'll talk a little bit about some of the decisions we made. And then I'll give each panelist an opportunity, a couple minutes to finish off their bracket, give us their final four all the way to their champion or their proposed champion pick from this bracket. And we'll go from there. I have everyone's charts set up ahead of time, so we'll be able to go through them. Tom, we're going to start with you. We're starting with the first matchup in the Northwest, Visa versus PayPal. Start there. What are you seeing?
Yeah, this is one I think is kind of interesting. I mean, I'm a PayPal fan, have been for quite some time. I really like the chart here. You can see on this is a 5-year weekly chart, and obviously we're moving up from left to right for the last 5 years. So we're trending up, which as a momentum trader, I'm always interested in. I think too, PayPal did well throughout the pandemic. We did have that initial drop back in February and March, But this was one of those companies that was accumulated very heavily coming out of that period. And I think you can look at that at the top of the chart. I've got the accumulation distribution line there. And I just think PayPal to me shows that it's been heavily accumulated. If you switch over to Visa, I think the problem with Visa is I'm really seeing the opposite. I'm seeing a little bit more sideways action. We did recently get a breakout, but that AD line seems to have topped and is starting to roll over. So I have a little bit of problem there. I went with PayPal.
All right, so vote one, we have PayPal over Visa. Greg Schnell, your charts are here. Let's start with PayPal. What did you see?
Sure, for PayPal, and it had a great year. I think I'm going to call it the stay-at-home stock where everybody was buying everything online, and PayPal is really easy to do that. What I like about the chart, obviously, is that it's tilting up and to the right very strongly. What I don't like on the chart is the scooter ranking is getting weak. The PPO is rolling over, just about going into lower lows there. So for me, the stock is losing its momentum and probably needs to migrate down to the zero line before it's going to get kinetic energy to go higher. My pick for Visa is a little stronger. And the reason I like Visa is because 25% of their earnings are based on travel alone. And so I expect restaurant and travel sites like airlines to really soar here in the coming 6 months. And so I like that on Visa. I realize the scooter ranking is out of favor, but I think it was PayPal ordering online, and now it's going to be back to credit cards in person. So my pick is Visa.
It's fascinating. We're at the point where we're able to talk about that as potentially coming shortly. That's fantastic. Grayson, you are third in line now. Start with PayPal. What did you see with this first matchup?
Yeah, so I loved this matchup. I ended up picking PayPal. I'll tell you why. One, I mean, you have two stocks that are generally in an uptrend, but you do have Visa that's kind of been drifting a little bit more sideways. It's threatening a breakout. It's trying to make a breakout. But when I look at just the pure price action, PayPal still in a broader uptrend, a stronger uptrend. Specifically on my two charts, I've got that relative strength line up at the top. That's the stock versus VTI, the total market. PayPal generally outperforming the market pretty heavily. Visa over the last couple of months has been strongly underperforming the market. So I want to find the things that are strongest. I want to find those relative strength lines that are going up. So that was one of my big things with picking PayPal. It's just been generally outperforming the market, pulled back to its 100-day, which is totally fine within a broader uptrend. I also like that they're a little bit better to take advantage of, better suited to take advantage of some things like cryptocurrencies and things like that. They're sort of positioned to benefit from that whole growth. So I went with PayPal.
All right. Decent picks. So I've selected my bracket as well. I went with Visa. So I think I'm agreeing with Greg on this one. This is one of the couple where we actually split 50-50 between the four of us. When I'm looking at these two stocks, for me, it's interesting to sort of combine the macro with the micro and what we're seeing with the individual names versus, the big picture and what we're seeing. And obviously we're doing this, we're recording this in mid to late March when there's a lot of rotation happening. So I struggled a lot just with the time frame we agreed on, right? And thinking 6 months out of the road, because I think the next month, the next 3 months, the next 6 months could potentially look very different. Having said that, when I'm looking at PayPal, I see a stock that's had a pretty successful run, 2-year run, pretty established for sure, but it's pulled back pretty steeply in the last, 4 to 6 weeks. And my concern is I don't think that's the end of that. I think there's a further rotation away from names like PayPal, which I am already assuming that my friend Tom Bowley probably will disagree on that thesis, but that's kind of where I'm looking at. When I'm looking at Visa, I'm seeing something that overall is not in a bad long-term trend. I'm seeing something that's pulling back to arguably more of the lower end of this channel. And PayPal rallies because of the stay-at-home trade. I think Visa rallies for what Greg was suggesting. I think that's more of a reopening play, and you see the opportunities there. Also, I think a stock like Visa does more and more with cryptocurrencies like PayPal and others have tried to do. I think that provides some potential juice there. So on pick number one, we are officially split. 2 votes for Visa, 2 votes for PayPal. We did not 100% agree on a single pick this entire time, so there will be some healthy debate, I think, along the way. Having said that, let's move to Arguably, what may have been the most controversial, Pat, this was, I think, where the most smack talking that occurred before we started recording was on this matchup of Ford versus Tesla. We have an established automaker attempting to get into the electric vehicle space and arguably finding success versus what you think of the first time you think of electric vehicles, Tesla. Greg, let's start with you this time. I have your chart of Ford here. Start there. What did you see in this matchup? Start with Ford.
So first of all, Ford's moved away from cars totally. They're only doing SUVs and trucks. So I like that. I think they're actually going to outperform because cars are really unloved for the most part. So they've got the new electric truck coming out. They've moved the Mustang over to the electric platform. I drive a Ford 2020. It is a beautiful machine. The semi-autonomous driving is beautiful. The lane control and the cruise control is really nice. I don't have the quality problems that Teslas have. I think Tesla has a lot of competition coming, and that's one of the reasons that I like Ford here is I think they've got the network set up to sell the cars. So moving on to Tesla's chart. I think there's now 36 competitors entering the electric car market. I don't think Tesla gets to own that by themselves anymore. I think it'll be death by 1,000 cuts from competitors, each person taking a different tact against them. And it's a cutthroat business. I don't think first in wins.
There was I picked up a Peter Lynch style buy what you know with the Ford pitch there, but I see what you're saying. So that's one vote for Ford. Grayson, I have your charts up. Ford versus Tesla. What did you see?
Yeah, so it's interesting to break this down into sort of two sides. There's the pure technicals, which we can start there. I love what I'm seeing out of Ford. I mean, it's made that breakout above sort of the $10 level, the low tens. Relative strength is beautiful. This is really strongly outperforming the total market, really sort of making a beautiful rebound there. I wish the accumulation was stronger. That is definitely one weak point that I see on this. But a great scooter score. The moving averages look great. Just a really strong trend out of the lows that we saw last year. So technically, I love Ford. Tesla has just run so far. And I totally agree with what Greg's saying about just kind of positioning and first in doesn't necessarily win. I think there are going to be more automakers that rotate into electric vehicles. Obviously, manufacturers like Porsche saying that they're going to go fully electric by 2025. So there aren't too many times that I break this. I mentioned breaking it into sort of two sides. There aren't too many times that I'm going to talk about valuation, but I just can't look at $51 billion market cap on Ford and 600 and whatever billion dollar market cap on Tesla and think that it makes any sense. So I do struggle with that valuation on Tesla. So, I think it'll continue to rotate lower. I love the breakout on Ford. I love the relative strength. So that's my pick.
Grayson, thank you for being brave enough to say the word valuation on our technical evaluation of these.
I know.
Of these companies.
Not too often.
No, but listen, it is totally fair game in a discussion like this to start technical and bring in whatever else we need to make the argument. Tom, Tesla versus Ford. What do you see?
All right. This is my number 16 seed versus my number 1. I just don't see Ford at all personally. It's had a strong run, most of it here in the last couple months on a relative basis. It also saw some relative strength earlier in 2020. But I think that Ford long-term has been a horrible investment. I think it's gotten better. I think it's being lifted. Rising tide lifts all boats. And I think that's what we're seeing with some of these electric vehicle makers. The clear leader is Tesla. And when I look at the Tesla chart, I see a stock that went up from, you can see it on the chart, but it went up quite a bit here over the past year, 2 years. And hey, it deserves a pullback. I don't think there were too many folks that probably liked Apple when Apple pulled back and some of its competitors were trying to take share from them 5 years ago, 10 years ago, 15 years ago. But I think with Tesla, you have the clear leader. I think as Grayson mentioned, the accumulation distribution on Tesla is undeniable. And when you look at Ford, it's actually not confirming at all. As prices go up, the AD line is going down. I think for me, this was the easiest pick of all of them. I'm a Tesla fan here.
It's such a great, actually that, and I'm sorry folks, if you're watching and I'm not doing a great job of making sure I'm following along. I'm doing my best, but on Tom's charts, the very top line is that accumulation distribution indicator. You mentioned it. That's one of the clearest divergences or differentiations, I think, between some of these names, the increase in the accumulation distribution on Tesla and sort of the flattening that you saw with the Ford. That's a great point. So, the way I looked at this as well, and let me bring up a 2-year chart. So my go-to chart was a 2-year chart. and I update all of those. When I'm looking at the chart of Ford, I sort of see the fundamental argument that Grayson was saying. I think when you look at valuations, and maybe with Greg as well, I think the three of us came down on the side of Ford, and Tom was the lone vote for Tesla. For me, the story of electric vehicles, and Greg's done a great job with some specials on a special on StockCharts TV, particularly on this whole thesis. But you look at Tesla as leading the way. For me, I see the chart of Tesla as validating the idea of what they're able to do. I think the companies that will be able to really outperform over the longer term are names like Ford that really get into it and get behind it and start to build out. So I think you're right. I think Tesla's had an incredible run. For me, I'm looking at the relative strength of Ford, which is continuing to consistently go higher, whereas Tesla is coming off fairly elevated levels. I think one other thing to think about is just in terms of volatility. Do you want an increased volatility experience or a lessened volatility experience? And if they're both going higher, and I probably end up picking Ford maybe for that reason as well. Good discussion, and I think we both made some decent arguments. So that's three of us for Ford and one very valid vote, Tom, for Tesla. Matchup number 3, we are going old energy versus new energy. I would guess this is Greg Schnell's potentially favorite matchup because we're bringing us some energy names and we have a chance to debate a ConocoPhillips versus a Plug Power. Grayson, I want to start with you though, and I have your chart here. We're starting with Plug Power. What do you see?
This one was tough. Plug coming off so aggressively from 75 down to 34 was tough to see. That said, I think it just got so far ahead of its skis that this is sort of a healthy reset for the stock. Ultimately, it's kind of pulled back to a level that makes sense, sort of a level that it ran into prior resistance, back in, what was that, December. So, it's still sitting right around its 100-day moving average, which isn't bad. I think overall, this is a healthy reset within a broader uptrend for Plug. And specifically, you've got great accumulation distribution on this. I love the accumulation on the stock. I love the strong scooter score. I think this is going to continue to move higher overall. With ConocoPhillips, energy obviously has seen a huge rebound, but to see Conoco get rejected around the, in this case, the 61 level, failing to take out those highs in the 63 level that we saw back in sort of end of 2019. That hurt. So, ultimately, I think that Plug is kind of, closer in line with the future. So that was my choice, was Plug.
That is a really good argument for Plug Power over ConocoPhillips. Tom Bowley, let's go to you. Looking at this matchup, what do you see with Plug Power?
Yeah, this was a really tough one for me as well. With Plug, the problem is, you're seeing, I think Plug, there's just so much based on future potential. They haven't yet turned the corner in terms of profitability. And that would be the one thing that would bother me because the stock's gone up so much. If they don't figure that out, how to make the money, you've got a lot of risk here. So that would be my biggest concern. I agree with Grayson. I like the AD on Plug. I like the potential for the stock. I like the space and renewable energy. I like that a lot more than Conoco. If you pull up the COP chart, I agree. We're struggling to get back above where we were going into the pandemic, whereas you can obviously see there was a lot more money rotating into Plug. So really for that reason alone, that's the reason why I'm going to go with Plug on this one.
Greg Schnell, two experts have set the stage. I can see when I think of energy names, I think to call you and see what you think. How are you looking at this matchup?
I'm going to take 25 minutes on this one. I got Plug Power as second place. And the reason I have it as second place, and don't get me wrong, I've been in and out of Ballard Power. I like Ballard Power. I like the hydrogen space. I actually think electric isn't where the car business goes. It goes to hydrogen. So I like Plug. I think the chart's rolled over. They've had some accounting issues recently. And over the next 6 months, I expect those accounting issues to basically keep investors away until that gets fixed. Looking at ConocoPhillips, going to that chart, this is a major breakout. Like, we are literally just setting up to go big here for the next 2 or 3 years. The MBS, Mohammed bin Salman of the Kingdom of Saudi Arabia, has good control over the price of oil. We're going to go to $80 this year. And I think all of these oil companies are really going to start to move. The move to electric, we need a lot of copper and we need a lot of stuff. But in the meantime, we need oil. And we're going to be going way, way higher on oil stocks.
All right, a strong vote for ConocoPhillips. You can only get one vote at a time, but we'll give that a vote to ConocoPhillips then. So when I was looking at this matchup, I ended up agreeing with Greg on this one. We were split 2-2 on this one. I picked ConocoPhillips over Plug Power. You know, when I look at the chart of Plug Power, I have the concerns that I think, Tom, you kind of laid out. It's had an incredible, Grayson too, it's had an incredible run. It's pulled back so beautifully, but in a way that doesn't make me feel great about the long-term trend of it. And again, I think the time frame of this could be key. I could see a scenario where a couple of years from now, Plug Power is materially higher, and it's a pretty good bet. But I'm wondering in the next 6 months what the better of the two would be, which is what we agreed on. When I see ConocoPhillips, I see more of the opportunities that Greg had mentioned. I could see energy doing well for the remainder of the year, for the next 6 months at least. And I could see names like Plug Power, which have had good runs and still have more backing and filling to do before they resume an uptrend. I don't know if the pain has been felt enough, which seems strange because the chart's already pulled back a little bit. But overall, I ended up agreeing with Greg on this one and voted ConocoPhillips. So we were split 2-2 on that matchup. Matchup number 4, we're going to semiconductors. Semiconductors are actually up pretty good today. So you have the whole space, the SMH up 4 or 5% before we started recording. Tom, we'll start back with you. It's Intel versus NVIDIA. Start with Intel.
Yeah, first off, I love this group. I love semiconductors. I've loved them for a while. This is one of your leading groups in the market. So I'm going to like most semiconductors. It really comes down to relative strength. I do like the fact that Intel has been strengthening, as you can see coming out of the November lows. Almost about the time the vaccine news came out, we started seeing Intel making a run back to the upside, which is good. After mostly going sideways, I think the story in NVIDIA, however, is one of much more growth. And I tend to be very growth oriented, especially with GDP expected to rise significantly over the next year. And with interest rates still historically low, I think growth stocks are going to be rewarded. And as a result, I'm going to go with NVIDIA, simply based on that. Last year or 2 years ago, NVIDIA had earnings of less than $6 a share. This past year, they were $10 a share, whereas Intel went from $489 to $531. So I think with this pick, I'm just looking more at growth. I'm looking at that AD line on NVIDIA, which I think has been very strong. So I'm going to go with NVIDIA on this one.
All right, one vote for NVIDIA. Greg Schnell, look at the pair. What are you seeing?
Okay, starting with Intel, I like the breakout to new 5-year highs coming up here. That looks good to me. Scooter ranking moving back up towards 75. This is a giant in the industry, and I expect them to do very, very well. So I'm continuing to like that one. If we flip over to NVIDIA, the chart, we joked about it a little bit before the show, but basically it's been sleeping since September while semiconductors have gone higher. The scooter ranking is down at 10. It could stay down here for 6 months before it actually gets some horsepower to go higher. So, yeah, I would stay away from it and go with my first pick in Intel.
All right, we have vote for 1 and 1 as a tiebreaker pick. Grayson, what did you see on Intel?
Yeah, it's a good question. So I love this matchup. Again, just like everyone else is echoing, I love semiconductors. That's actually a position that I have is SMH overall. I think that time frame is key here. So when I look at NVIDIA, I look at a name that's had a great run, a great history to it, but it's just really been consolidating sideways for quite a few months now. Like Greg said, just been sleeping and really declining relative strength since October of last year. When I think about Intel, I think about a chart that is, again, breaking out to new highs. That's what I personally love to buy is new high breakouts, accelerating relative strength for the last couple of months. So I love to see that. If we're looking out a couple of years, I could see a case where NVIDIA is a better play. But in the time frame that we're actually going for in this show, a couple of months, I think Intel makes that breakout as semiconductors strengthen. And I think that's a better play for sort of the midterm here, the short term, midterm kind of time frame that we're looking at. So
I think you guys hit on really good points across the board. And I would have to, I guess the way I would summarize it, out of all of them, this is maybe the one I struggle with the most, only because I like semiconductors as a whole. I think it's a really good space. And it was even tough to pick 2 names to go in there. And I think you're right. I think you've seen the nice bounce in Intel higher, especially today going up, and the relative strength. It's hard to deny that. I think when I'm looking at the long-term trajectory with NVIDIA, I'm seeing something coming out of the oversold region. I somehow turned into a value investor all of a sudden, just thinking about buying weakness. I know I'm sweating just saying that. But it's something that bounced off of its 200-day, and I'm thinking if the group works, I could see NVIDIA kind of catching up and rotating higher and outperforming over the next 6 months. But if this is one matchup, if I had the opportunity to pick both, I probably would have tried to do so. All right, we now go to the northeast corner of the bracket. We go to financials. Let's start with Greg Schnell. We have JPMorgan versus Travelers. So this is more of a large bank versus insurance, a name that's sort of improving recently. What did you see here?
It was a run off the November lows from 100 to 160 for JP Morgan. It was about the same for Travelers. They aren't that much different. I do like JP Morgan, just the breadth of its business. It can get involved in trading. It can get involved in mergers, acquisitions, all that kind of stuff. So I like the JP Morgan business. I just think it's got a little bit more upside, but in terms of ranking the two, the charts are so similar. If you go to the Travelers chart, you'll see a nice push out of the 110 area there up to 160. It's nice. It was just kind of the same thing. Two charts mirroring each other, PPO rolling over on both. So not my long-term favorite, but I like them both. I'd pick JP Morgan to be able to hold up a little better.
Okay. Grayson, what did you see with this matchup?
Yeah, the Jamie Dimon matchup. I like this one. It ultimately came down to relative strength for me. I mean, two relatively similar charts in the sense that we've got sort of strengthening, rotation back into them, a nice breakout to new highs. But ultimately with JP Morgan, what you're seeing is much stronger relative strength. I love to see that outperformance of VTI overall. I wish the accumulation distribution was better on this. That is, again, a weak spot on this chart. But the scooter score is strong. The moving averages look great. The breakouts and new highs. I love the trend. And it's relative strength to me. When I look at Travelers, it just doesn't really have that. It is starting to strengthen, but it's not as good as JP Morgan ultimately. So I think that that move in JP Morgan is stronger to me. So this would be my pick is JP Morgan.
All right. We have 2 votes for JP Morgan. Do we make it a trifecta? Tom Bowley.
Of course not.
And I asked that question knowing that it's probably not the case, but go ahead and give us your pitch.
Hey, this show would be no fun if we all put the same thing.
It's true. It's true.
So yeah, this one, I would say this was the hardest one for me of all of them. I actually like both of them. I like financials. I think we're in an environment where the economy is going to strengthen, is strengthening. I think interest rates go higher. So I think that's going to really help financials. And so I think they outperform the S&P 500. So it's really trying to split hairs here between the two of them. The reason I'm going to go with Travelers, and as Grayson pointed out, the AD line, accumulation distribution, stronger on Travelers, but it's weaker on the relative strength. But the thing that maybe separates this for me is that I think JP Morgan's already gotten the benefit of a huge surge in the spread between the 10-year and 2-year Treasury yield. And I think a lot of that's priced in to the stock. And so I think rates will probably begin to stabilize, even though I think they go higher. And I think just based on that, I'm going to go with a slight nod toward Travelers.
You all make decent arguments. I'm going to side with the majority here and agree with on the JP Morgan pick. And for me, I think it's about the relative strength. That's sort of what I keyed on when I bring up this chart of JP Morgan. This line at the bottom just makes me feel really good about the long-term trajectory. It's working, and I like that. Also, I would say interest rates in general can go a lot higher than we think. And I think people have already been talking about interest rates topping out on it. I think they have further to go, and I think that's going to help JP Morgan a lot more for sure over the next 6 months if that would continue. So I added a vote for JPM. Our next matchup is getting back to technology. We're talking about an established tech company, Microsoft, here in the Pacific Northwest versus Zoom, a more recent addition. Grayson, I'd love for you to start the debate here, starting with Microsoft. What did you see?
Yeah, this was a pretty easy one. Sometimes when I've had a tough day, I just pull up a 5-year chart of Microsoft and I just kind of stare at the trend, the long-term trend. It's just a beauty of a trend. I think it's continuing here. I mean, we've seen a little bit of sideways action for the last couple of months. Not the greatest relative strength, but in a broader uptrend. Just such a steady 200-day moving. Look, that is the most steady 200-day moving average. I mean, it's just a thing of beauty. So, ultimately, it was pretty easy for me here. Zoom is a stock that's had a huge run, obviously last year, but declining relative strength. It's broken below the 200-day moving average. It is in a downtrend, has been really since October. So this was a pretty easy pick for me. Again, time frame is key. I think in the 6-month time frame that we're looking at, Microsoft is going to be a better play than Zoom. I think Zoom's got a little ways to fall back to earth before it really finds a bottom. Over the couple years, next few years, I don't know. Maybe Zoom does end up being a better pick, but for the time frame we're looking at, I like Microsoft.
Time frame is key. Tom Bowley, what did you see on this one?
Yeah, this was another really hard one for me because I really, really like both of these companies. Microsoft, I agree with everything Grayson said. I think it's a steady performer. I think if you're looking at these two stocks and you're saying, hey, I want to be able to sleep well at night, I think Microsoft's your pick without a doubt. I think if you're looking at these two picks and you're like, well, I would like to maybe take on a little bit more risk. And I honestly think that Zoom is at a tremendous level right here on its 50, sitting at its 50-week moving average. First time it's tested. This is a stock that ran from $70 to $600 in 8 months. I kind of think of it as a toddler. When you buy clothes that are 3 sizes too big and they grow into it. I think that's what Zoom's trying to do. I think Zoom got these clothes and it's taking time to bring the technicals up, not the technicals up, but the fundamentals up, the earnings per share, while the stock pulls back. I think they're getting very close to that level where I am really attracted to Zoom. One last comment on Zoom. You don't see it here on the weekly chart, but on a daily chart, had a massive gap up from the 325 level. I really think this area of the chart is interesting. And for that reason, I'm going with Zoom.
Very opportunistic call on Zoom. Greg Schnell, talk us through these two real quick.
Okay, Microsoft, Satya Nadella is a king. He's taken a big company that was relatively underperforming, and it's been a light bulb ever since he took the chair. It's gone up and up and up. It continues to show brilliance. The PPO is pulling back to around 2.5%. I think it just turns back up here and makes its next leg higher. You notice it's above 0 all the time on the PPO. When you go to Zoom, Zoom is a really nice chart, but I think you get paid for growth. And what happened is Zoom will actually have declining growth this year. So it'll still go up, but it might not go up anywhere near as fast as it was. And I think anybody who's a momentum trader is going to see that scooter ranking at 0 and leave it there. So I don't think it goes anywhere.
It's funny. I remember years ago, one of my analysts at Fidelity, Mark Dibble, used to say that Microsoft doesn't chart well. It was this choppy sideways chart that never did anything. Look at how this chart has evolved into a long-term growth story, sort of reemerged as a growth name. And I agree with the points that a number of you made. I see Microsoft over Zoom. Zoom, I think, is pulling back. I think that was that was a nice rally during this. There was a work from home play that I think could reemerge, but for me, I think it's I'm going with slow and steady growth, which has worked, along with the cloud and others that Microsoft is doing. We're almost done with the first round. Our next matchup is getting into shooting to the moon, shooting into space. We have Boeing versus Virgin Galactic, and looking at a key matchup here. Tom Bowley, can we start with you? Looking at Boeing, what did you see here?
Yeah, I'd say this was a tough one for a different reason for me. Zoom and Microsoft, I both liked. Boeing and Virgin Galactic, I don't like either one of them. I do like the fact that Boeing, is coming up here out of the recent lows, but that was quite a tumble. I think, we're still trying to get back to where we were when we began the fall. They do a lot of things, obviously, but one of the things they do is sell airplanes. And I don't know that the airline industry is ever going to get back to where it was. I think that there's a lot of companies now that will be doing a lot of business via Zoom or via Teams and those types of things. I just don't think travel is going to go back anytime soon, certainly not over the next 6 months to where it was before. However, I'm actually going to go with Boeing simply because I'm not a big fan of Virgin Galactic. I think that this is a stock that's still got a lot to prove. It's continuing to burn through cash. They lose a lot of money. And when you look at the chart, yes, it went up back in January, but so did every other highly shorted stock. I think that was not necessarily long-term demand. I think that was short-term demand. The chart is kind of pointing up. I get it, but I'm just going to go with the safer stock here, I think, in Boeing.
All right, vote number 1 for Boeing. Greg Schnell, what did you see, Boeing versus Virgin Galactic?
Boeing, I just like that it's kind of got its problems behind us and it's starting to work up. Airlines have all stepped in to buy new planes. They've done over 100 new orders since January. I think China and India are going to continue to order planes forever. So I see Boeing as a big long-term play, and I just think we're coming out of the hole, so it's good value. If I go look at the space chart, and I was in the space chart for a while, but you just see the big pop and pullback. It still has no revenue to really talk about, and even Chamath, the optimist, was selling it. So I'm going to stay away from it and go with Boeing.
All right, 2 votes for Boeing. Do we make it 3, Grayson Roze?
Yes, we do. I just, there's something technically on the Virgin Galactic chart that I like. I mean, in some sense, it's in an uptrend. It's got a rising 200-day. It's making higher highs and higher lows, but it's so choppy. I just really struggle with that Virgin Galactic chart, especially something like the accumulation distribution line on that. I mean, it's being bought, it's being sold, it's being bought, it's being sold. It's all over the place. So, Boeing, just a steadier name. I think there is some reopening to it, outperforming the market a little bit. 200-day starting to trend up. So, that's my pick. I think it's just a better pick. But I'm kind of with Tom. I didn't love this matchup. I'm excited to move to the next round.
And we actually, it turns out this is the one out of the 8 matchups that we all agreed on. I picked Boeing as well. This may be a home team, the hometown bias or whatever it's called, where you end up picking companies nearby. But same thing with Boeing. I think it's been an impressive breakout story, and I like the break that it's recently had in February going into March. I think that was a nice sort of breakout and a pullback, and then a break as well. And I think it's pulling back to the breakout level here this week. So overall, I think that's setting up pretty well. Virgin Galactic, it's just from a technical perspective, I have a lot of trouble thinking of a chart like this as being a good option versus a Boeing, which feels more established and ready to go. We are 4 for 4 on Boeing. Our last matchup in the first round, I guess, new tobacco and old tobacco, or new, I don't know how I want to phrase this out that won't get me in trouble, so we'll just get to the charts. Grayson, you want to start with this one and go with Tilray?
Yeah. So Altria was my pick. Tilray, I just can't help but see that big decline for the last couple of years. Sure, we've bounced. We're back above some key moving averages, which is great, but a lot of selling in this name, accumulation distribution drifting lower. It has so dramatically underperformed VTI over the last 2 years. That's starting to turn around a little bit, but a little bit too much volatility in this. And specifically when we compare it to Altria, making a nice breakout, outperforming the market, a steadier move, starting to pick up on the accumulation distribution, scooter score rising. I just liked Mo quite a lot more. There was Mo to love about that chart. So that was my pick, was Altria.
I see what you did there. Craig, what did you see on Tilray versus Altria?
Well, we even had Chewbacca in the capital, so I think we're on the right charts here. We got to have some tobacco in here. Tilray is breaking out to the upside. We're at $25. I think the chart continues to move higher. Mexico's legalizing, America's legalizing, Canada's already legalized. So I think the whole edibles, psychedelics, all of that's going higher. I think Tilray will play in that. Mo is a pretty safe stock to be in, and I realize it has some investments in the cannabis space, but I don't think it'll actually outperform some of the other names. Tilray by far is a wild card, but anyway, we're going Tilray.
All right, we have 1 for each. Tom, what did you see between these two?
Yeah, this is another one where I'm looking at a little bit safer play versus one that's kind of a little wild. I can see both sides of this. It depends on just whether or not you want to take that additional risk. I really don't like the Tilray AD line. You see a number of times where the stock trades up in the morning and then gets absolutely killed later in the day. I think that's a sign of distribution. Mm-hmm. So I think that move to the upside for me on Tilray is one that I just don't trust based looking at the AD line. The other thing that, I haven't really talked about too much, but I am a fan of growth because I do think with the GDP as high as it is and with interest rates as low as they are, growth is going to be rewarded, growth and earnings. And Tilray still hasn't shown that they can make money. I think the safer play here is with Mo. If you look back the last 3 years, they've been growing their earnings even through all of the pandemic. You can see the long-term trend line. If you connect all those tops the last 5 years, that was broken here over the past couple of months. The AD line's breaking out. I thought this was kind of an easier one for me to pick, even though I am going with the safer stock, which is really not like me, but I'm going to go with the safer one and go with Mo here.
Way to break the mold for the final pick in the first round, Tom. I'm proud of you, I guess, in some way. You know, when I was thinking of this one, it's funny. If I didn't look at the chart, I would argue, even with the 6-month time frame, I would probably argue just what we've seen with the growth in the cannabis space and marijuana space. Tilray seems more opportunistic than Altria, but when I'm looking at the charts, I see Tilray with a blow off top and then a lot of congestion, a lot of volatility. With the Mo chart, I don't have the accumulation distribution on my charts, but I'm not surprised that it looks as it does, because the relative strength, this is a group, Philip Morris as well, the relative strength has rotated higher beautifully just in the last couple months. And I would never feel bad about buying a chart like that, for the next 3 to 6 months. I'd probably in general, and also with a healthy dividend on an established business. Guys, we have made it through the first round. That was awesome. I would love to just take a break here from the picks and go one at a time. Tom, we can start with you. As you look through those 8 picks that you've made so far, what matchup do you feel the most comfortable with? Which matchup do you feel the least comfortable with? Give us like a minute and answer that for us.
Well, for me, without a doubt, I like Tesla over Ford.
Yeah.
That was the easiest pick for me. Again, I'm talking and coming from a growth perspective. I think growth is going to be rewarded in this market. We haven't seen GDP at 6.5% since the 1980s. And we've certainly never seen it with 10-year treasury yield at 1.7%. So being a practicing or former practicing CPA, I just think it's something that you have to take into account, that valuations of companies that can grow their earnings rapidly sometimes seem unreasonable. But in this kind of an environment, I don't believe they're unreasonable at all. And when I look back at the earnings on Tilray, on Tesla, we've gone from 2 years ago losing $5.44 a share to this past year earning $2.23. That is incredibly strong growth. And over that same period, Ford went from 129 to 118 down to 41 cents. And yes, they might have some bright prospects, and I do think they go higher. I think all these stocks are going to go higher, to be honest, maybe with the exception of something like space. But I just think that the growth is a theme that, again, based on my background and having valued companies in public accounting, that I can't overlook. And so I think some of these companies that made huge runs, like Tesla and like Zoom, did so for a reason. I think they're pulling back. I think they're consolidating, and I think they're going to launch again. So those were a couple that I thought were easy. The tough one for me, as I mentioned, I think was probably JPMorgan versus Travelers, because I do think financials are going to do well. They underperformed for a while. I think they've started to outperform. I think they continue to outperform, although I don't think they'll be the best performing group. I think they'll be a solid group. And it was really hard for me to differentiate between those two stocks, Travelers and JPMorgan. I could have gone either way there.
Greg, which of these 8 matchups did you spend the most time debating, and why? Just to take a minute.
Probably Tilray and Altria. The big thing for me was Tilray wouldn't have been the chart I picked to represent the MJ space, but given that choice, I do think the MJ has a lot of momentum to it. I think there's some room for improvement there. I don't see the stability of the Altria business as something to kind of excite me over the next 6 months. So that was one of the ones that I didn't really. I couldn't find a good balance. I didn't like the choice of Tilray, but that still represents the group I think will do better.
Yep. Grayson, any of the 8 picks that you struggled with in particular?
Yeah, the first one that we talked about, Visa versus PayPal, I actually struggled with that one a lot. I mean, we're seeing a lot of strength, have been, they kind of hit the breakout level and pulled back, but we've been seeing a lot of strength out of the credit card names. MasterCard follows Visa and Amex and stuff. They've all been setting up really nicely. So I love that idea of the breakout on something like Visa, and to see it sort of reflected in its brothers and sisters, if you will, in MasterCard and Amex and stuff. But I just think, I agree with Tom. I think growth will return. I think growth will be rewarded. I think the narrative on PayPal makes a lot more sense to me. And to see a name that's been loved, that's been outperforming, pull back to a pretty reasonable level at, about its 100-day moving average. I think they're better suited to take advantage of some of these big themes that we hear a lot of people talking about, like the explosion of crypto and more people trying to actually pay with cryptocurrencies, online shopping continuing. I think PayPal's, obviously well positioned to take advantage of that. So it made more sense to me, but I definitely struggled with that because Visa, frankly, is in a similar boat. They're positioned to take advantage of some of that stuff as well. So that one was hard for me.
Awesome. All right, guys, we need to finish off our brackets. We have limited time, so I'd love if you'd each take about 1 minute. Tom, we'll start with you. Just quickly go through the remainder of your bracket and talk us through your picks and get us to your proposed champion. Tom, let's start with you.
All right. Well, first thing I would say is that Tesla. I'll just start off. Tesla is my champ. That'll summarize it pretty quickly. I think they have the absolute most opportunity to grow their earnings very, very rapidly. And I think in this environment, they are going to be rewarded for doing so. Unfortunately, PayPal had to go up against Tesla. So I liked PayPal. And I think PayPal will do well in this environment too. PayPal's been growing its earnings very strongly, very consistently. And I think that will continue. And I think PayPal will do well. But so on that side of the bracket, those two were certainly stocks that I felt, had a really good chance to win this thing. But I ended up going with Tesla. On the other side of the bracket, I actually have Zoom coming out. And I have Zoom coming out for much the same reason. I think this is a company that if you look back to their earnings a year ago, pre-pandemic, they earned 35 cents. In the last year, they earned $3.33. And unlike some, and I know Greg mentioned a good point that he thinks they're going to slow down. I think their growth will slow down. I don't think their profits will. And so as a result, I see their profits continuing to expand. And in this market environment, low interest rates, GDP 6.5%, and a paradigm shift toward online, working from home, I think all of that favors Zoom. I understand the position that the three of you are taking against some of these stocks in the short term, but I believe that you're going to see a rebound in these stocks. So I have Tesla beating Zoom in the championship.
That's a decent bracket, Tom. I appreciate where you're coming from. Greg Schnell, let's take it here. Take a minute if you could. Talk us through your bracket. We're showing it on the screen. What did you see overall?
I've got Visa over PayPal, which I liked. I think Visa takes out Ford, actually, just because I think there's going to be a big surgence of on-site shopping. I had ConocoPhillips taking out Intel. So on the left-hand side, I had Visa going up against ConocoPhillips. Seriously, I think oil hits new 5-year highs within the next 3 to 6 months, and everybody who calls it uninvestable will quickly be behind the boat. So I think Visa for the left side, but ConocoPhillips is positioned well. On the right-hand side, I had JPMorgan against Microsoft. I think Microsoft wins. I had BA against Tilray, and I had Boeing winning that. Coming out of there, I just think Boeing's got some upside because it was so beaten down. It's a good, strong industrial. Their factories will pick up speed as they're allowed to sit closer together. So coming down to Visa and Boeing, I picked Boeing, but it was a horse race of good names there. I think they're both going to do fine.
All right. So we have one Tesla pick. We have Boeing winning it all, according to Greg Schnell. Grayson Roze, we're showing your bracket now. Talk us through quickly, if you could, your picks from round one on.
Yeah. So, I'll pull a Tom here and just tell you straight up, PayPal was my pick at the end. I have PayPal winning it all. But starting on the left side of the bracket, I have PayPal going up against Ford. I did like the strength of Ford, but when I think about those two names, when I compare the charts, I see PayPal, which has had a great run, a great uptrend, and it's pulled back. It's sort of taken a breather out of that. I think Ford has had a similarly a great trend, great relative strength, all of that, but it hasn't had a chance to take any sort of breather. So I think ultimately Ford actually might find some weakness here, stumble a little bit, take a breather within a healthy uptrend. So for that reason, I have PayPal beating Ford. Down below that, Plug versus Intel. Intel breaking out to multi-year highs is an incredibly strong thing, especially within such a fantastic group, a steady outperformer like semiconductors. I think that's going to be a nice sort of tailwind for Intel. Plug, I think there's a lot more uncertainty there. I do like the chart where it's pulled back to actually makes a lot of sense to me. But ultimately I think the relative strength on Intel and the multi-year breakout to new highs makes sense. So in the next round there on the left side of the bracket, I've got PayPal versus Intel. I still just love PayPal. I think the narrative behind it makes a lot of sense. And technically what I'm seeing on that chart makes sense. So I'm going with PayPal on the left side of the bracket. On the right side of the bracket, I've got JPMorgan going up against Microsoft. The rising rate environment helps JPMorgan. I think that makes sense to me. Relative strength is a little bit stronger. Microsoft's still a great pick, but I think JPMorgan's got a stronger sort of short term in front of it. So I have JPMorgan beating Microsoft. I mentioned that I didn't really love that Boeing versus Virgin Galactic matchup just because I thought both of those charts were pretty weak. So Altria is my pick between Boeing and Mo. And then when I put that up against JPMorgan, there's really no question to me. JPMorgan, just a beautiful chart, making that breakout and great relative strength. So I've got PayPal going up against JPMorgan. I still think that PayPal just a little bit better positioned to outperform. JPMorgan, I think, is going to continue to move higher, but PayPal is my pick overall. I think it's going to be a stronger chart looking out a couple of months.
It's good arguments all around. So looking at my bracket, I'll go to my punchline. I was entertained that my last two picks in a stock picking competition were Ford versus JP Morgan, but that's where I ended up going by each matchup individually. So I don't know if I feel great about that or if it reminds me of what the market has done. I think if we did this a couple months ago, my bracket probably would have looked very different, but I'm very much on the rotation choppy. But I think 2021 is going to be choppier than a lot of people expect. And I think the growth story works, but it takes some time. So a stock like JP Morgan working in a higher rate environment, I think there's a good argument there. And the same thing, Ford, I took over Visa and I saw Ford go all the way to the final matchup, only because when I'm looking at charts and you asked me to pick an example chart of a decent trend that I would probably not have any problem following, Ford would probably be one of those. NVIDIA almost made it there because for me, I think put in any semiconductor stock, I probably feel pretty good about having that go in the bracket. And then Boeing was the last of the final four for me. So what's interesting is we actually each picked a different, and we did not see each other's picks ahead of time. We all picked our own. We each picked four different names. So our four that we picked as a group, Boeing, JP Morgan, PayPal, Tesla. So final question to each of you as we wrap up what I hope was a lot of fun. We had a lot of fun doing this and chatting stocks with you guys. I'd love to go around one at a time. What stock did we not include in this bracket? And I should warn everyone, we did not talk about this question ahead of time. So off guard question, what did we not include in this bracket of 16 that could have made it in your final four had we included it? Anything come to mind? Greg, start with you.
I just think the oil names are really going to do well. So I'd be focused over there over the next 6 months. Literally, I think the Kingdom of Saudi Arabia is going to tell us where the price of oil is going to go, and he's taking it there. So I want to be on that train. So I would pick a FANG or a CNQ in Canada.
Doubling down on energy. Grayson, what would you say? How would you answer that question?
Yeah, one that came to mind actually pretty much instantly is Starbucks. Starbucks is a beauty of a chart right now. Obviously a big company pays a little bit of a dividend, which is nice, but a breakout to new highs. It came back, retested that breakout almost down to the penny, and continuing to move higher. Great relative strength, great accumulation distribution. That's one that comes to mind. Plus, I know that Tom would be happy if we had thrown Starbucks in the bracket there. But yeah, that's definitely one that comes to mind.
Tom, what did we miss in the bracket of 16 that comes to mind for you?
Grayson just said it, Starbucks. I mean, if there's one company that can beat Tesla, it's Starbucks. No,
there you go.
Actually, I do agree. Starbucks is one that would have been fun to talk about. And I do like Starbucks. I like the chart. I like the area. I like the consumer discretionary space. But I think if there was one thing, the two choices for the semiconductors would not have been two of my favorites, as far obviously we can have a nice debate between the two. But I think if you had thrown in an Applied Materials or a Micron, I think that would have made a lot more interesting discussion for me anyway, and a lot more thought-provoking in terms of, would I have picked them over a Tesla? I don't know, but I really like those two names in the semiconductor space, showing tremendous relative strength, great accumulation distribution. And so that would probably be one thing that I would have changed, maybe is just the names within that semiconductor space.
Guys, we're at the end. This was so much fun. Thank you for putting your picks out there. Thank you for putting up with each other as we debated beforehand and during the special, talking about strengths and weaknesses of all these charts. Tom Bowley, Greg Schnell, Grayson Roze. I respect you guys a great deal, and it's awesome to have you on this on the show today. Thank you guys so much.
Thanks
for having us.
All right, everyone. That is it for Chart Madness. As a reminder, go to stockcharts.com/chart madness, download your own bracket, pick your own, see how they matched up with our picks. For Stock Charts TV in Redmond, Washington, I'm Dave Keller. Be safe. Have a good one.
Hey, Grayson Roze here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.